Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to the Wednesday edition of the Daily Market Commentary. I am your host, Chuck Fulkers, and hope everybody had a great trading day yesterday as we are heading into the back half of the week. No daily market commentary yesterday as we had a live trading room. So for those of you that are new to the channel, do me a favor, click that subscribe button down below. I think they say smash that bell so that you get the alerts and the updates. And if you're not new to the channel, do me a favor, leave a comment on the page, leave a like. That helps the YouTube algorithm machine know that people are actually watching. Let's go ahead and dive right in. So yesterday we had the S&P was down for a good part of the day before then rallying fairly hard for most of the day. You know, I say a good part of the day, it was really down a good part of the Globex session before then rallying pretty hard. And as that had rallied back up, I'd said, well, maybe there's an opportunity to get short somewhere in there. Because I'm essentially treating every rally as an opportunity to get short until proven otherwise. I'm not biased one way or the other, but until I'm proven otherwise, every rally is an opportunity to get short. Because on my 4-hour time period, I've still got essentially lower swing lows and lower swing highs. Now we have started to put in a bit of a base, and we had talked about below this 26.26 as an opportunity for a breakout to the downside. We've not really been able to penetrate that level, and so there has been the ability to ride this thing up from this level. Now, I will tell you, your higher probability is to wait for good turning point trades. If you are selling short, your higher probability is to wait for good turns. However, it does look like we're going to have a little bit of a gap up today in the equities markets in general. So if you do want to take advantage of some of the bullish momentum that we've built up, you may get an opportunity. And where I would do is, as I'm taking a look at how this market is moving, we started right here at about midnight. We've lost a little bit of momentum, and then on a 15-minute chart here, what I'm seeing is a fair amount of selling pressure up above. So that selling pressure that we're getting up above, and I can see that by all those upper wicks, right? Those upper wicks tells me that there's a bit of selling pressure. So if indeed we kind of make it back into here, if you are of the bullish ilk, you may get an opportunity at a pullback into this level here. Now this is a fairly tight little zone, a fairly tight little level. For those of you that go all the way down, and I don't go down to this time frame very often, but I know a number of you do. If you go down to the 5-minute level, you'll see that level here after a fairly nice move away. My only concern with this level on a 15-minute time period, looking at it, would be that you are seeing a little bit of weakening momentum of this upside rally. But I'm going to put this in play, and then if somebody is interested in it, take a look at your risk tolerances. I still say it's lower probability simply due to the fact that our big picture is telling us to be a seller. My big picture being the 4-hour time period. So what I'm going to do is put a little bit of a confirmation entry just to kind of give myself a little bit more clarity, right? I want to make sure that it comes into here and I get long as it comes back out. Now, there's a chance it doesn't do that, right? And it continues to search for our higher probability levels, which on the 1-hour chart are up above us. Our best high probability level doesn't come into play until way up here, but we've got two 15-minute levels up above us as well. And those 15-minute levels that are up above us both make good turning points. Now, that 15-minute level that we just identified down below us, the reason that we selected that particular level was these lower wicks. Now, getting lower, with these two wicks getting lower than this low right here, that tells me that we had to have wiped out any buy orders that were, any sell orders that were remaining on this area because price rallied up, but then also any of the buy orders that were remaining at the bottom of this candle had to also have been wiped out. Now, if you want to be a little bit more conservative, you'd actually probably take all the way down to here as well, because this is a little bit of a wick over wick level. I'm going, just with this piece here. It's a tighter zone. Now there's going to be traders that short this as a breakdown. This does not meet our breakdown requirements, but there's going to be a number of traders that do short this as a breakdown. And if they short that as a breakdown, this then becomes a buying opportunity, and it becomes a little bit of what I would consider a bear trap, right? We're trapping the bears. Right now, this is the Globex low, and a little area of fair price value below the Globex low will oftentimes serve as a trap location. So this does serve as a little bit of a bear trap at this point, because a lot of traders will be shorting the breakdown below the Globex low if indeed that occurs, and that sets up for a potential reversal trade here. Okay, so that's the long opportunity in the ES. As far as a short one goes, we're still looking way up here, 27.12 by 27.19 as the best alternative. Now this is in the middle of the, call it supply and demand. Call that a supply and demand equation. It's in the middle of that equation, right? With demand being lower, supply being a bit higher, and the fact that I've got a better level above this one is why we have a confirmation at 27.12 by 27.19. Still a quality level. Looking at the time of day, it's formed right after market open. The level above it is Globex, but still one I'd rather just hold off on. So there's my levels in the S&P for the day. Moving over to the NQ in the NASDAQ. So here in the NASDAQ, we have very similar price actions that we have to the S&P. Now the NASDAQ is up 0.15%. The ES is up 0.09%. So essentially, we're just a bit better than flat this morning, right? When I look at that same 15-minute chart in the NASDAQ that I did in the S&P, your NASDAQ level would be this area right about here. Now, in our NASDAQ level, I don't like this one as much as I did the S&P level, simply because it looks like to be a retest of this area right here to the left. So both of these levels, both the NASDAQ and the S&P, are fairly weak. They're not super strong, which is why we've got confirmation style purple entries. But both of them could work out for a potential reversal. So keep an eye on both of those today. In crude oil. So in crude, we have an area up above us where we expect a bit of a reverse, 53.08 by 53.55. We had a decent move in crude off of this level here, and for those of you that follow the DMC regularly, we had a confirmation style entry off of this here, and we got our confirmation entry, and then price came down and hit our target before then rallying back up. And now we've eliminated this area. This area is no longer valid since we've used it all up. So really it sets up 53.08 by 53.55 as our next level. Technically, you could use this area up here as another level if indeed we make it back to this region here. Because it got higher than all the other candles' highs, it does create its own brand new area of imbalance. And so we technically could use this area up here as a potential area to sell when price returns. I think if we make it up to there, then this is a bigger price magnet, and the magnet of price up there would serve to make it a little bit more difficult for that reversal to occur. But looking at this on a 15-minute chart, we're actually showing a lot of weakness in oil right now as it's coming down pretty hard. Now, when I'm looking at some areas where it may stop going down and start to reverse and head back up, looking at this 15-minute time period, you theoretically could do it here, where we have this long wick up before price dropped back down, and then we rallied higher. So this long wick up tells me that at one point this was a big green candle, and then it came back down. So this is, call it a rally, call this a drop, and then a little bit of basing before a nice rally. That would be kind of the area to look for in this region. Okay, the area that we would look for and kind of wrap our lines around it would be this whole area here. So keep an eye on that one for today. Now, once again, slightly lower probability because we're down on a 15-minute time period, and also it's not near a pivot. So it would be a better opportunity in a little bit more of a pivot area. But it does indeed still exist and is still very viable. So keep an eye on that one for today as well. Obviously, you've got to know your own risk tolerances to see if that makes sense. All right, gold. So in gold, we had a really, really nice reversal trade in gold. Lots of people jumped on that one with us. If you caught that gold trade, do me a favor, leave a comment in the comment section down below if you caught that gold trade. Now, we've obviously got a gap up this morning on gold. We have some fun contract play. So our next gold level is still between these two areas. There's nothing really to add at this point in gold. Technically we could maybe use this area down here, but I'm going to leave this one be as it is. The gold levels are essentially going to stay the same as where they were. We just removed the one that worked exceptionally well. Next, let's move over to bonds and then into our currency markets. So in bonds, we had after our contract shift here, we had a little bit of a potential breakdown level below 119. This came from our live trading room yesterday. It didn't meet entry yesterday. Still is there, still in play. I would be very, very tight on the stop. Very tight on the stop. Take your money off the table fairly quickly and be very tight on the stop if indeed you do take this bond breakdown level. Next, the Aussie. So in the Aussie, we don't have a lot of huge movements. Our best level is this potential opportunity way down in here. And we are in a 4-hour time period moving in essentially a sideways price action. So that sideways price action always keeps me sitting on my hands more frequently than trying to force a trade. And that's kind of where I am right now in the Aussie. I don't want to force something when I've got essentially sideways 4-hour price action. If I go down, all the way down to say a 15-minute chart, this little level here served to be a really nice reversal trade off of that on the 15-minute time period. And now I'm putting in a fair amount of selling pressure. If you notice all the upper wicks, take a look at all the upper wicks here. Way more upper wicks than lower wicks. And that tells me that the buyers keep trying to come in and drive it higher, and the sellers are saying, no soup for you, not interested, driving it lower. And I think that it's got a better chance to continue to go lower. My problem is just the fact that I think it's got a better chance to go lower doesn't mean I'm willing to get in, right? I need a quality reversal opportunity and something that sets up clearly, and this one does not. So I'm going to let this be at the moment. In the euro, so the euro, for those of you that jumped onto our euro short a couple of days ago and are still riding it, let me know. We removed the lines from the charts yesterday because there was no reason to keep the lines on there. But the euro level is still working out very effectively, and so now we got to look at what's our next opportunity in the euro. So looking at the euro on a 15-minute time period, going down to a 15-minute chart. Right here at our midnight. Now, midnight is not typically an excellent level time of day, but we are rallying up into it, and it is a potential for a reversal if we come back into here. So I'm going to make sure that this is in purple because it's 15 minutes and it's a lower time of day, but we could get a little reversal right here in the euro off of this level. 131.23, 131.73 is the area that we've got identified here in the euro. Now, by the way, if that level's too wide for you, if you don't necessarily like that euro setup, instead of doing the 6E or the EC, you could certainly still do the euro USD, right? If you just trade the euro USD, maybe you just trade the mini lot or the micro lot, as you are controlling your risk that way, right? So on the 15-minute time period, it would be 295 by 1301 would be our area here in the euro USD. So 1295 by 1301. I mean, it's a tiny little, tiny little level, and something that should be a very small amount of risk for you if you short this rally up into this region here. So remember, you don't get into trading to be a futures trader. You get in to make money. And if the level that we were just looking at is too wide, then the better opportunity is to go to the currency pair and just trade the currency pair. Always going to still be a viable trading vehicle. Next, Canadian dollar. So in the Canadian dollar, we have a very similar price action to the euro, where we've just had a pretty strong sell-off off the 1 hour chart, and that's where I would have to wrap my lines around for my next available opportunity. Right up in here, if price does indeed return to there, which I don't necessarily think that it will. I'm going to remove that one because I've already got the level set up in the euro, and the euro is a slightly higher probability trade setup from what I can see. So looking at this on a 4 hour time period, we are in a downward trend. It looks like we're going to continue to be in a downward trend. We are definitely a net seller, right? I mean, and for those of you that use trend channels, this is about as clear as a trend channel as you're going to get, right? Just bouncing between, call it wholesale and retail price levels. And so that would tell me that price has a chance to continue to go a bit lower. Now we are sitting at an area here near where it could act as a bit of a floor, right? A bit of demand. But in all reality, on the daily chart, our next true floor area, our next true demand area, doesn't really come into play until about here. So slide that back to the hourly chart, and you can see that gives us lots of room for price to continue to run. And so getting short at that next move might make a whole lot of sense. All right, moving over, Great British Pound, Japanese Yen, looking at at those markets. So in our Japanese yen trade, we actually had a really nice breakdown yesterday in our live trading room off of the Japanese yen. So if any of you took that one, great. It's hit target 1 and target 2. So I'm going to remove those off the chart. And then if you moved your stop down to just above here, you're probably just about out of that position in the Japanese yen. So the next opportunity is to get short on a rally, and now I'm waiting to see, do I get a nice rally to get short in again? Now I could use this long upper wick of this hourly chart as a potential zone, but I've got to actually go to a 15-minute chart to see it more clearly. When I go to a 15-minute chart, you see that it's just a big green candle followed by that one long move down. I'm a little hesitant to use this whole area up here. Technically, this is the zone, is that whole wick area of this level. I'm a little hesitant to use that because it's a bit wider than what I would probably be comfortable with based upon what it's going to pay me from a reward to risk standpoint. So for now, I'm just going to leave everything off of it. But worked out for a pretty nice trade for those people that jumped in on the breakdown. Remember, breakdowns are key in many of these instances. Great British Pound starting to get us a little bit of a rally higher. Once again, we've got another very similar level to what we have in the euro for a potential reversal as the pound is rallying a bit higher here early in this early morning trading. Nat gas, we've got a 15-minute level up above us that is still in play. Nat gas has really blown through a lot of levels recently, and so it's been one that's a bit more risky. So just know that going into it. And then certainly last is copper. And so in copper, once again, all of our metals have the gap on the contract shift. But our copper level that's up here, we would look for a confirmation short on this level. And the confirmation short exists because this is not a well-placed time of day trade. And in all reality, your level would be this whole area, right? You'd be better off using this whole area up here, placing your stop up above here, because that's going to be your true better zone. Okay? All right, well, that's all I have for today. If you guys have any questions, please send us an email, support@tradersarmy.com. I will see you again tomorrow. Peace out, everybody. Later.